Welcome back. Now, China shares rose this morning after the country released trade data that showed a smaller than expected contraction from a year earlier, giving investors a little bit of hope for an economic recovery despite the continued global spread of the novel coronavirus. Now, China's exports fell 6.6% in March from a year earlier, while imports shrank 0.9%, a better than expected outcome as factories restarted production, though the global coronavirus health crisis looks set to keep trade under pressure over coming months. Now, the Hang Seng Index ended up 0.5% at 24,435 points, so a much better picture for the Hang Seng there out in that Hong Kong market. The Shanghai Composite also doing fairly well today, 2,827 points. It's up 1.6%, while the Nikkei out in Japan, the biggest gainer today, 3.1% higher, 19,638 points. Heading over to the United States, well, the Dow Jones and the S&P 500 fell last night, unfortunately. This was after last week's strong gains as U.S. companies prepared to kick off a quarterly earnings season that is expected to be very rough due to the coronavirus pandemic, while Amazon gains helped the Nasdaq end a little bit higher. So the Dow Jones Industrial 1.4% down then by close of trade, while the S&P 500 lost around 1% to 2,761 points. The Nasdaq Composite added around 0.5%, 8,192 points. Let's quickly check in on how the rest of the markets are looking out in Europe as well. The sense of positivity could only come from more stimulus measures and the fact that perhaps things are beginning to peter off a little bit. It's not the case right now, so unfortunately, most of the European markets are in negative territory. The FTSE 100 out in London, though, still managing to get some gains. Moving on to the local market, some positivity then as well on the local indices, around 2% higher for the JSE All Share at present, so now sitting at 48,870 points. A good day for industrials as well. They're nearly 1% to the good, while financials are seeing some slightly positive numbers there as well, around 1% to the good as well there. Heading over to the commodity share front, well, this has been of keen interest as well for quite some time. Will investors plow back into these commodities? That has been the big question. That oil price now sitting slightly positive, $31.74 a barrel. That was falling, of course, below that $30 a barrel mark, but even there does feel a little low considering that we have had that production cut, which will see a total of around 20 million barrels per day being seen cut in terms of the production there. Platinum price, though, slightly higher at $760 a fine ounce, with gold sitting at $1,700 odd a fine ounce there. Onto your currencies, a slight fall then for the local currency. We had seen it strengthen to around 1802 actually a little bit earlier on, and would hope that it would have dipped below, but it seems that the cut in interest rates has moved the currency in the other direction, but it is only marginal. It's now fallen off ever so slightly, just around 1% today, so actually a bit of a big fall off there. 22.96 for a British pound, 20 rand and 5 cents then for a euro. More weakness unfortunately seeping in there. So that is the state of what the markets look like right now. Let's head on over there and chat to Sean Morrison from IG South Africa as well, as we get to unpack this market movement a little bit more. Sean, it has been one where you find that the necessary moves may now necessarily come from Treasury and the like, and that will determine what moves from here on in, because investors are just looking for a way forward. Does that 100 basis point cut do anything for you?
Yeah, I think it's a step in the right direction, Arabile. These are difficult times for everybody. Any type of relief that we can get is certainly appreciated, and obviously a surprise cut. It will help the economy, will help people with their debt. We know that unemployment is going to be under further pressure over this lockdown period. So anything that just helps people keep a little bit more money in their pocket is very welcome.
We haven't, however, gotten a sense from the National Treasury with regards to what will be done on that front. Does that, frighten you? Does that give you a sense of, disbelief, a sense of exasperation? Or is it a case of, well, they've kind of offered a little bit of advice here and there, and they've been part of the discussions, and it's okay for now?
I think Treasury will come to the party. They will. They're going to help where they can. There are some rumors as well that we could be looking at. There are conversations being had with the International Monetary Fund as well. I think if putting everything into context, we don't know exactly how big this impact is going to be. We know it's going to be severe. When you looked at the Reserve Bank statement, you could see that, our economy is expected to contract by 6.1%.
Yeah.
We're already in a recessionary environment. But I mean, if you look at the global picture, it's early on in the year, we had the IMF. They were suggesting, economic growth. They had downward revision down to 3.5% growth. Now we're looking at a possible contraction of 2.9%. So we really are in uncharted territory right here. So, you have central banks around the world throwing the kitchen sink at this. But it's really about supply chains and the disruption and being able to actually just start to continue business.
Yeah. Look, this has obviously been a health crisis and not necessarily a financial crisis. So financials are still working quite fine at a point like this. But the problem just becomes whether you're finding the right opportunities now, whether there is an opportunity right now in the market. Would you say that perhaps now is the time to get in, or are you still finding that we may look to seek the bottom a little bit more?
Let's say bottom pickers become cotton pickers in the market. So I think it's a bit of a dangerous time to be bottom picking. What we do know now is, I think, and it's the beginning of earnings seasons out of the US, and obviously that's quite a good barometer for what's happening in the global economy. We've got major banks out, investment banks, JP Morgan, actually just come out with their results, and there was a severe miss, and these banks are obviously linked to global economic growth. So the picture is dark. So I would suggest, instead of getting in too early, is just sort of waiting to see the outcomes of that economic impact on business, and we are going to start seeing that now as we start to see that first quarter results coming through.
Yeah,
and the US will be the leading indicator for that.
Yeah. Tell us what's your biggest driver right now, though, Sean. I mean, what's the one thing you head to you open your laptop to now and think, I need to see how that's doing. That determines what drives the markets today. What's the biggest point for you right now?
Well, at the moment, every time I open my laptop, I think the first thing I'm checking out is, how many more people are being infected with COVID-19.
Yeah.
We want to see that we start to turn the corner, and unfortunately, I don't think we're there yet. Every now and again, we get that indication that Europe might be doing better, and then all of a sudden, you see a flood of new infections. Because I think we're looking to China now to see how China sort of get back to work. They are getting back to work at this point in time. We're looking at Europe. Obviously, combined Euro economy is the biggest economy in the world, and they haven't seemed to. Are they peaking yet? We're trying to ascertain as whether are those infections peaking there? Yeah. Are they going to be able to start the corner? And then the US, as we know, it's they definitely haven't peaked, and those infections are.
And it just keeps on going. Yeah. Sean, thank you so much for that. Really appreciate it. Sean Morrison is from IG South Africa, giving us a sense of just how the markets are faring. The biggest sticking point right now, just whether the Reserve Bank's move there to cut interest rates will certainly help. I suppose in the meantime it will. Look.